Welcome back to Alpha Recap, your end-of-day digest from stockalpha.ai. We're wrapping up a busy session, and as always, if you have questions, you can reach us at stockalpha.ai. So, what really stands out here is the clear split inside big tech and a bit of legal noise that landed across the tape.
Absolutely. Good to be back. It felt like a classic day where a handful of mega-caps grabbed all the headlines, while a lot of the rest of the market shuffled around in the background.
Let's start with the big headline. Apple closed at a record today, and the number that really caught our eye? Apple closed at a record $311.18.
Wow, that's a milestone, and not just a PR moment. When a giant like Apple hits a record, it matters for index composition and for anybody with market cap-weighted exposure. Momentum flows tend to flock to winners.
Right, and the flip side was Nvidia, which slid about 1.8% and did so on very heavy volume. Nvidia finished the day near $219.51 on roughly 201 million shares traded.
Heavy volume on a down day usually suggests distribution or profit-taking rather than a tiny blip. Given Nvidia's role as a bellwether for semiconductors and AI hardware, that kind of move ripples through a lot of related exposures. Yeah, that tracks.
This is a good spot to unpack what that divergence actually means. Apple pushing to a high while Nvidia pulled back shows leadership narrowing. A few mega-cap names can carry indexes higher even when the broader group struggles. That changes who benefits from index flows and can amplify the performance of large-cap heavy allocations.
And I mean, when you step back and look at this, it's also about AI spreading into unexpected places. BMO reiterated an outperform on one big retailer because of an AI partnership with a major search company. Execution matters, not just raw AI hype.
Exactly. Walmart's tie-up and a few smaller AI vendors launching proof-of-concept work suggest AI is moving into logistics and retail operations, not just cloud and chips. Robo.ai's Neurovia rolled out a product called NeuroStream and kicked off commercial pilots. Those are nearer-term milestones that are easier to scorecard than vaporware.
So we've got diffusion, AI beyond pure-play names, and at the same time concentrated leadership among a few giants. That combination can create both momentum and spots of volatility.
Shifting gears, there was another undercurrent that we can't ignore today, a wave of securities class action notices from plaintiffs' law firms.
Right. Several companies were named. The notices mentioned names from biotech to packaging and beauty. We saw filings related to Gossamer Bio, SES AI Corporation, New Era Energy and Digital, Atara Biotherapeutics, Graphic Packaging, and Coty.
These announcements typically increase headline-driven volatility for the affected stocks. The mechanics are straightforward. While lead plaintiff motions and formal complaints work their way through, liquidity can shrink, and event-driven desks sometimes trim exposure, which can exacerbate moves.
Analysts note that these notices don't usually include settlement ranges right off the bat. They tend to cite alleged numeric losses or percentages, which modelers can use to stress test downside scenarios. But at the outset, a lot is unknown.
Short reaction? Keep an eye on dockets and any follow-up filings. Those are what actually move the needle.
Short reaction. Agreed. Will do.
Now let's talk about ETFs and leveraged products, which amplified today's moves.
Yeah. The semiconductor inverse product fell about 3% to $8.29 on about 251 million shares. The inverse small cap product also fell 3% to $4.68 on roughly 296 million shares. Those are huge volumes for leveraged products.
And the Bitcoin futures ETF traded essentially flat at about $10.61, but with very large volume, about 136 million shares. So crypto-related flow was present, even if the price barely moved.
Leveraged products always bring the drama. The point here is that heavy volume in those funds is consistent with rapid rebalancing or liquidation. They can exaggerate sector rotations and make intraday liquidity unpredictable.
Which connects back to Nvidia. When a sector leader pauses and folks are levered into semiconductors, inverse and leveraged funds can swing violently and feed through to options desks, prop traders, and market makers.
Exactly. So even a modest pullback in an index heavyweight can create outsized volatility elsewhere via these products.
Let's hit some corporate housekeeping. Home Depot declared a $2.33 quarterly dividend, important for income-minded allocations. Bank of America and Merrill disclosed a modest $32,354 sale of fund shares, which reads as routine rebalancing. And one analyst reaffirmed a $30 target for Warby Parker versus a market price nearer $24.50.
Lazard announced that its CEO will speak at a financial conference on June 10th. That's a scheduled event where nuance on strategy or M&A appetite can move the stock. Small, scheduled events like that are actually meaningful for short-term traders.
In the clean energy corner, Deployable Energy received approval for a preliminary documented safety analysis for its Unity microreactor under Department of Energy frameworks. That clears a regulatory step and sets up a criticality milestone this summer.
PDSA approval reduces a major regulatory uncertainty. Achieving criticality would be a binary technical milestone. It could unlock follow-on partnerships or government support if the program hits its mark. So that's one to watch for anyone tracking advanced nuclear demonstrations.
On the crypto and alt assets front, the America First Business Challenge, backed by the Trump Coin platform, will award up to $1 million in grants over 90 days to support entrepreneurs. That kind of program can spike on-chain activity in the short run.
But the bigger question is whether it creates sustained engagement. Traders will be watching application milestones, disbursements, and on-chain metrics to see if activity sticks.
Rapid-fire updates. Graphic Packaging, Atara, and Coty each had law firm notices. Expect docket monitoring. Procomer pitched Costa Rica investment opportunities in Europe, which matters for Latin America infrastructure watchers. And a market research note forecasted that the road marking paints market could get to about $4.9 billion by 2036, naming major suppliers like 3M and PPG.
Analysts will use those quantitative data points as starting points for scenario analysis, but they're not definitive. Important nuance there.
Okay, let's step back and pull the patterns together. We saw a few emerging trends today.
Pattern 1. Litigation breadth rising. Multiple securities notices across sectors increases idiosyncratic risk for the named companies.
Pattern 2. AI diffusion beyond core chip makers. Apple's new high, retail AI partnerships, and commercial proof of concept work all point to a widening set of execution risks tied to AI.
Pattern 3. Levered product volatility. Outsized volume in inverse semiconductor and small-cap funds shows how these instruments amplify sector pauses or reversals.
Pattern 4. Event-driven catalysts are concentrated. Scheduled speeches, proof-of-concept milestones, and regulatory approvals will dictate short-term momentum in the affected names.
So what should listeners be watching when markets reopen?
First, price action and volume in Nvidia and Apple. Will Nvidia's heavy volume pullback continue or stabilize? And can Apple sustain levels above $311.18? Second, follow-up filings and lead plaintiff motions for those securities notices. Any formal complaints or court dates will be material. Third, continued volume trends in the leveraged ETFs. If SOXS and TZA keep seeing heavy flows, short-term volatility might stay elevated. Fourth, updates on Deployable Energy's path to criticality and any Department of Energy commentary. And finally, watch for winners and disbursements from that entrepreneurship challenge. That will show whether the Trump Coin initiative moves on-chain activity.
I'd add scheduled corporate events like the Lazard CEO appearance on June 10th and upcoming quarterly reports. Those are the cadence points that reset estimates and can surprise on guidance.
Before we sign off, quick reminder, this digest was informational only. Analysts note the mix of momentum and event-driven risk. We're pointing out what happened and what might drive volatility, not making any buy or sell calls. Use official filings and management disclosures as your primary sources and maintain risk controls when sizing positions.
Yeah. And honestly, I was a bit surprised by how many law firms were active across unrelated sectors in one day. That breadth is not something to ignore.
Totally. Key takeaways. Apple finished the day at a new record. Nvidia pulled back on heavy volume. Multiple securities notice filings raised idiosyncratic risk across sectors, and leveraged ETF volume showed how quickly intraday volatility can amplify. Keep an eye on the docket filings, leveraged product volumes, and the handful of scheduled milestones that could trigger fresh moves.
Short reaction, good summary.
That's our recap for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back after the next close with more highlights and what they mean.